That's what we spend all of our time doing, right? Like, we're in the field, like 3 million air miles the last 25 years, right? Like, not from my house. I mean, the point is, like, that's been our secret sauce, trying to find who the winners are. Who are going to be the winners in, like, robotics, autonomy, physical AI? The amount that's going to be spent in those areas could potentially dwarf what we've already seen today.
We have Dan Ives on the podcast today. He leads tech research at Wedbush. They launched an Ives AI Revolution ETF. That's an AI ETF, and he's been pretty early and pretty loud about the AI Capex supercycle. So Dan, welcome to the show.
Yeah, great to be here.
Okay, so Josh and I are investors. I have experience mainly in crypto. Josh has more experience in AI. And I want to start with this question. Is it too late for me to get rich on AI, Dan?
I mean, look, I believe we're in the second inning of the AI revolution. Because, see, it's my view, and this goes back to 2022 when it started with, Godfather of AI, Jensen, NVIDIA, and my view of when it was all starting. It's a 10-year build out. So I strongly disagree. Like when investors are like, oh, the stocks have run so much, I missed it. Dude, this is just the beginning, because the second, third, fourth derivatives across enterprise, consumer, semis, energy, robotics hasn't even started in terms of full scale. Autonomous hasn't started as well. So to me, that's going to be the holy grail.
Okay, that makes sense. So you're saying we're in this second inning of a 9-inning game, of course, but you coming from crypto, we know that these innings, of course, can span multiple cycles, and you can have boom bust cycles across them. And so this is the NVIDIA chart that I'm showing right now. And even by crypto standards, okay, like we don't often see charts that look like this, which is just like a parabolic line up from 2023 up to now. Like this is an incredible chart. And you're saying, Dan, you think that like buying this chart is actually a good thing to do at this point in time? I mean, it's hard for me to believe.
Yeah, and that's been but remember the last, my career, 25 years in tech? I mean, really for the last 15, investors have just fought it. No, it can't go up more. No, because it's my view, we're in a fourth industrial revolution. And that's really been our view, not just NVIDIA, Palantir, of Microsoft, of everything we've seen across the tech sphere, is that you have 3 to 4 trillion that's going to be spent in the next 2 to 3 years. Now, I'm not saying you're not going to have pullbacks, but it's my view, we're going to be talking about 5 trillion, $6 trillion market caps. And a lot of it just comes down, when you look at NVIDIA specifically, like there's one chip fueling the AI revolution, and it's led by Godfather of AI, Jensen, NVIDIA. There's no
Sure.
one else that's within miles of NVIDIA.
Okay, do you think that this fourth industrial revolution will play out across cycles, though, is kind of my question. So 25 years in tech investing, so you've seen a number of bull and bust cycles, including, of course, the full dot-com cycle, right? You had 1995 all the way to 1999. And then you had a massive boom, of course, at the end of the 90s, and then a bust, of which a lot of people said it's over, internet's never coming back, all of this thing. There was some recovery time, and ultimately I think the internet bulls turned out to be right on that, but it took some time. And so even a fourth industrial revolution, even second inning of the game here, but do you think that this still could play out in cycles? And the cycles maybe just because of human psychology, right? Like we're in crypto, we've seen so many of these cycles, things get ahead of their skis. Yeah, do you think this plays out in cycles?
Yeah, see, normally I'd say yes, like in terms of cycles, right? Because my whole career, that's really what I've seen. Here's the reason I don't think this plays out in traditional cycles. It's because when you go back, like when I covered tech stocks in the late 90s and the boom and the bust, those were frothy companies, business models that were really untested. The use cases weren't really there. And these companies were essentially backed by VCs, and a lot of companies that are losing tons of money. Now, because big tech is essentially backing $325 billion of Capex, sovereigns haven't even gotten in it. Enterprise in the US, only 4% are actually starting to focus on AI. There's none in Europe, none in Asia, ex-China. I believe the next few years, this trend actually just multiplies. Like, it's our view. Like, look, we spend so much of our time in Asia. I believe there's more growth over the next 2 years when it comes to semis and when it comes to just overall demand globally than the last 10 years combined.
So you believe this chart just keeps kind of going up. Maybe there's some pullbacks, but it's nothing like kind of like a 90. I think Amazon had a 95% drawdown, for instance. One of the .com darlings, of course, that's quote unquote went bust. And then I think it took them, what, to 2008, 2010, something like that, to like recover just from the .com highs. You don't think anything like that will happen in
Big
AI? You
tech
think it's,
companies, yeah.
yeah,
Big
you
tech
think
companies, they have $1 trillion of cash in the balance sheet, and they generate 200 billion a year in free cash flow. So see the different. That's why like, a lot of times, like when I talk to investors, retail, institutional, whatever it is, when they talk about .com bubble, like I was a tech analyst in .com bubble and burst. So like I was there front and center. It's so dramatically different because of the use cases and because of computing power and because of what we're seeing on the enterprise. But on the consumer side, a lot of people are like, oh, ChatGPT, I'm not using it that much. It's not about that. It's about one in every 10 to 12 households is going to have a robot. It's about autonomous is going to be 25% of mobility. See, we're talking about the beginning of a transformational period of time not just an enterprise, but as a consumer.
And we talked about cycles. I want to talk about the super cycle, in particular the Capex super cycle. And I'd love for you to kind of walk us through, kind of map the dollars for us, Dan. So what exactly turns into shareholder returns over the next few years? I mean, you flagged $2 trillion of AI spend over the next 3 years. Who captures that margin first? Who captures it last? And
Sure.
where is it all heading to?
Look, it speaks to our Ives AI 30 and obviously ETFs based on that is that, okay, it starts with semis. Of course, starts with NVIDIA, but then TSMC, Broadcom, what I view AMD, and there's a number of other partners in there. Okay, so it starts with semis, and of course, semi equipment. Then it goes to software, hyperscalers, Microsoft, Amazon, Google. Look at everything what Oracle's doing, Renaissance of growth. You've even seen with IBM and others. But then it goes back to like, who wins in the use cases. So I'm just going through like almost a pattern. That's where Messi of AI Palantir, right? They hate the stock at 12, despise it at 50, yelling from the mountaintops at 100. And the bears, when they're in hibernation mode, they can't say AI in the spreadsheets when the stock's 200. Then you think about Datadog, MongoDB, Elastic. Okay, so now how do you protect it? Cybersecurity, CrowdStrike, Zscaler. Think about Palo Alto by CyberArk. Like you start to see more and more consolidation. The consumer side, Meta, Alphabet. And then it's my view, ultimately, where does this go with like physical AI, robotics, autonomous, Tesla, nuclear, names like Oklo. So that's my view. Like my view is like you can think about the theme in a very like tunneled vision. You have to now think about it in terms of the second, third, fourth derivatives playing out.
Mm-hmm. So when you look at these, is there anything that possibly derails spending? Because it looks like everything's going well, right? Everyone has a lot of money. They're pouring into these data centers. Is there anything along like a power issue or supply chain or policy,
Sure.
anything that you're looking for that would raise a red flag when you're evaluating these things?
No, look, like down the road, call it 6 to 8x more power, given the amount of data centers out there. That's a restricting factor. But if you think about where we are, like 3-4% in terms of through, that doesn't really till we're about 20% through where that's a restriction. That's probably not until 2028. So I'm just trying to give you like some like maybe like goalposts or timelines.
Mm-hmm.
Look, the biggest risk to this whole thing was US China. Trump, tariffs, cut tech off at the knees, chips selling into NVIDIA. But obviously, like, and look, we've spent a lot of time in DC meeting with lawmakers and people on the Hill. Like cooler heads prevailed, right? Like they recognize, like, okay, we cannot cut tech off the knees. That gives China an advantage. For the first time in 30 years, U.S. is ahead of China when it comes to tech. So that's why you're starting to see essentially a barter system, right? NVIDIA, AMD, you want to go in there, pay us 15%. Fine. It's a tax. It's a toll on the GW bridge. So to me, it's like, okay, there's geopolitical, there's supply issues, there's power issues. But the biggest thing is like, if the use cases work, this story plays out. And if I think about where we were, like being early in AI like in 2022 relative to where we are in 2025, like we are probably a year to a year and a half ahead where I thought we'd be.
While we're talking about this capex, so 2 trillion capex, where's the capex coming from? Is it primarily just strength of these like big tech company balance sheets so far, or is some of it debt at this point? Because that starts to, I guess, trigger my meter for how far we are into a capex super cycle. It's just like when we start needing more and more debt, let's say, and going up the risk curve from a debt perspective. But is it all retained earnings,
All
basically?
retained earnings.
Really? So it's these just large tech companies who've made billions selling ads and cloud and everything else, and they have that on their balance sheet, and now they're just spending it.
Spending it. I mean, see, that's the biggest difference. Like when if you're ever like, with a bunch of friends, like, oh, there's like 99. And yeah, look at Cisco. They're like, oh, look at Cisco's chart compared to NVIDIA. And it like, looks like it's the same. Look what happens. Yeah, but there's one thing you're missing. Like Silicon Valley essentially didn't exist then. And when you think about Capex and everything that we're seeing, it's new rules of the road, right? It's new rules of the game because big tech is essentially running it. But here's what's crazy. Sovereigns haven't even gotten involved. Middle East, they're just starting. Enterprises, just start. The consumer piece, that's just start. Robotics, still in the lab. Autonomous, just starting to get whatever. Waymo in 5 cities, robotaxi obviously now, Austin and some other city. So I'm just trying to show you like where we are in this.
Help me navigate the AI stack here a little bit further, Dan. So, say I'm kind of new to this. I'm newer to AI investing than Josh is, right? So you mentioned kind of semis at the bottom, right? And this is, to me, maybe this is the compute layer. As I look at like what you're holding in your ETF, it's things like NVIDIA, AMD, TSMC, even Broadcom, which is somewhat interesting to me. That's one layer. And then there's maybe the data center layer. Like we have to build out a whole
I
bunch
just
of
want to
data
stop you
centers.
right there.
Yeah.
Think about it like foundation of a house.
Okay.
The foundation of everything are chips.
Okay.
So just think about foundation house, because now we've built it. Those are the chips. As the concrete's getting filled in, and you're starting to build the actual structure of a house, that's the hyperscalers. Microsoft, AWS, Google, Oracle. Then, when you're thinking about use cases, software, that's the actual building of a house, the rooms, the furniture. Protecting it, that's a ring, that's an alarm. That's what cybersecurity is. See, I'm trying to like explain to you, but think about it like this. You're essentially building Vegas or Dubai, and it's desert, and you're just starting like 1945, 50 style to where we were when you think about build out Vegas. That's what AI is.
Interesting, Vegas. You using the casino analogy here, which is the fast money analogy. But let's continue with this kind of house analogy. And for maybe 2 innings in, that we're like 15% of the way there, 20% of the way there, something like that. So 80% remaining.
I think it's really more 5-10%. Yeah.
5 to 10%. Okay, all right. So we've got semis and compute, NVIDIA chips. That's kind of the foundation of the house, then, right? And I guess the framing of the house. I'll have to get some construction people on here because I don't know my house parts. But the framing, okay, of the house, that's like you're talking about the hyperscalers, all right? So we got the Google,
the storage, the data,
and storage, all of that, and then we have kind of the app layer, which I guess is like things like Palantir. These are I'm referring to all of these things as publicly traded companies.
These
because
are great.
That's what's in your ETF, okay? And then where do data centers fit? Is that like the attic space or something? Or is that what they,
yeah, I mean, but then like when you think about the hyperscalers, okay, and you think about, remember they have different they have like different functional areas. Their storage, their computing, they're the application layer.
Right.
They build out the cloud. So when you think about like part of how Microsoft and Nadella will be on the Mount Rushmore of CEOs for the next 200 years, because Nadella recognized, okay, we're Windows, we're enterprise. This going back to like when he 2014, when Nadella came in 2015, he recognized all about cloud. So when he built out the cloud, Amazon and obviously Bezos was ahead in terms of AWS. But here's the key. They built out cloud, built out cloud, built out cloud. When AI came, everything has to be in the cloud.
Yeah.
So that was a further catalyst for these companies where it's not just AI-driven workloads, it accelerates the cloud. It accelerates companies going from on-prem to cloud. So that's why these companies have almost had an accelerated growth, like a Microsoft, like Google Cloud, like look at Oracle, like if you look at that stock, that's a good example.
Okay, I get it. So most of the time, the hyperscalers then they have a ton in terms of data center and compute resources, I suppose. And there's not generally like independent companies here. So in each of these kind of layers of the house or the parts of the
And
house,
I would just say one
go
thing.
ahead.
And remember, a lot of the data centers, those are data centers all around the United States, all around the world,
Right.
where they're basically physical data centers, REITs, Equinox. I mean, there's different like players that play in the data center space. And look, there's more data centers under construction today
Sure.
than active data centers.
That's incredible. That does remind me of the 1990s, actually, when we were
But
building out
here's the
all
deal,
that infrastructure.
but the difference in 1990 is this is a 1995, 1996 moment.
Right.
Not a 1999 moment. And then you could be like, oh, in 3 years, it's going to be a 1999 moment. Look, my view is it's totally different because the system's not leveraged. The business models are there and it's being supported not by debt, but by the, essentially trillions that's going to be generated, not just big tech, but across the board.
In each of these layers, do you see a kind of a breakout network effect winner? Sort of like NVIDIA has sort of won the semis. I mean, they haven't won. I guess, there's TSMC
Like I
there
think
and
like
such.
Palantir has clearly been that one on the software.
Okay.
I think Microsoft's been the one on the hyperscaler. I think on the consumer side, it's been Meta because of the way that they're going to monetize that user base, the 3.5 billion. That like Meta is going to be the one on the consumer side. But we're just starting. It's like, okay, who's going to be a winner on autonomous? Like it's my view, like autonomous and robotics. Tesla is going to be the clear winner. It's a whole part of our thesis, right? Like with Tesla, like it's very easy when you look at Tesla, like, oh, it's an EV, it's a car company. I've never viewed it like that. And I view the holy grail from Musk and Tesla, which why Musk now wartime CEO, to focus on autonomous and robotics.
Is it the case that there are these power law winners in each of these categories from some kind of return to economies of scale? Or actually, we had Kathy Wood on the podcast not too long ago, and she talked about the notion of Wright's Law, which is basically the more of the thing you make, the cheaper they get to make, and you kind of build a network effect this way. And if you're saying, look, Tesla for robotics and AI, maybe it's because they make the most robots effectively. That's why they win. NVIDIA,
And
maybe they're making
scale
the most
and
chips.
cost.
Yeah. So is it the case that for each of these categories, we should expect some like really dominant players and returns to scale?
But it's not a zero-sum game. Now, at one point in the next 5-7 years, you'll have more and more competition. But that's why it's my view. Like you're gonna have winners in China, Baba, Baidu, and others. Like this is not one of those. It's a zero sum. It's one or the other, because the market opportunity is so massive, so early to where we are, and that's why it's my view that like we're gonna be talking about Nasdaq 25,000, 30,000 coming years. But again, like for someone like myself has done 25 years. Like, how many investors I've known that have missed every transformational growth stock because they're focused on valuation over the
Is they're
next
too
year?
expensive? They're always too
Now,
expensive?
at the time, it's like, well, the Greek crisis in 2000. No, but the geopolitical. No, but the Fed. But like there's always an excuse, right? Like, so the point is like, that's, like, I think we're most well known for just seeing like more like disruptive themes, picking the winners, and we don't get so bogged down with valuation over the next year, because I think with transformational growth trends, you can't do that.
So if I'm looking at AI and I was looking through kind of the stocks in your ETF, like the 30 ETFs, right? One thing that struck me too is it's primarily American, right? These are
Yeah, just a
primarily
few Chinese players, yeah.
okay. So is that because you think America is going to kind of win, or because it's just too hard to access China's capital markets? This fourth revolution, where do you think it happens? Is there like the internet
Mhm.
primarily happened in America? Do you think AI primarily happens in one
First
geography?
time in 30 years. Like I could tell you, someone that's like always like, in Asia 4 times a year. And all the time I'd have those trips. Then, I land in New York airport and I'm like, oh, we're so behind. Like,
Mm.
okay, guess what? The last few years, we're ahead. See, it's the first time, in my view, since mid 90s that US is ahead of China when it comes to tech because of AI, NVIDIA. China's going to have clear winners. Baidu, Baba, you have other one, Tencent. I mean, you're going to have winners there, but it's because it's the one chip fueling the AI revolution is NVIDIA. And
Hmm.
you're not selling, when you think about Blackwell and next gen chips, you'll have scaled down restricted chips you sell to China, but you're not going to sell the best chips to Chinese companies, sell it to US companies. And that's why it also goes back to like when DeepSeek happened, right away, like over that weekend, we're like, dude, there's a better chance of me playing the NBA than them spending $6 million. Like, add two commas. The chance that they didn't use NVIDIA chips, again, same chance like I'm playing Ryder Cup, September and Bethpage. So it comes down like there's a lot of like those moments like, oh my God, this, but look what ended up happening, right? Like they essentially had NVIDIA chips and you had two commas to what they really were spending. But that's why Trump administration understands the biggest asset they have when it comes to US China. It's the godfather of AI, Jensen NVIDIA.
Okay, so we're investing in the United States. We're investing in these categories. We have the semis, we have data centers, hyperscalers. I'm curious. I mean, for the people who are listening, is there a section of this house that we've just built that you see the most potential in? That is the most exciting? That has the most upside? That maybe most people aren't paying attention to? Is it in the foundational like data center layer? Is it the hyperscalers like Palantir, who's had tremendous returns in the past couple of quarters? Is there a place that kind of is asymmetric in expected returns versus the others?
I think the area, it's like when you said where people are missing, it's not really chips and it's not even cybersecurity. To me, it's software. Like what ultimately this is going to do to Salesforce, Adobe, Microsoft, Alphabet, in my view of Amazon and some of the parts, specifically on AWS, the MongoDBs, the Elastics. Like, it's like this is gonna be like, look, for every dollar spent on NVIDIA chip, we estimate there's a $10 multiplier across the rest stack.
Mm.
But it all happens in the software layer. That's the golden goose.
In the software layer, how do you identify like who's executing against this? Because it strikes me
That's
that some companies will, some companies will probably miss it. Have you identified that yet? And what do you look for if you haven't yet?
Yeah, I mean, being like, exposing, like, identifying Palantir like so early, right? That was a good example where it was like we identified it and we saw it just took time to play out.
Yeah.
That's what we spend all of our time doing, right? Like we're in the field, like 3 million air miles the last 25 years, right? Like not from my house. I mean, the point is like, it's, that's been our secret sauce, trying to find who the winners are. But no different, like who are going to be the winners in like robotics, autonomous, physical AI. I mean, I believe like the amount that's going to be spent in those areas could potentially dwarf what we've already seen today.
I think it's interesting because it's also going to be difficult to sort the signal from the noise because I mean I'm sure this
100%.
has already happened. I don't listen to many quarterly earnings calls, but I'm sure every CEO in the country is talking about their AI strategy and like what they're doing and using more and more buzzwords. And so at the software layer, you have to really separate the substance from the noise.
Yeah, and that's actually like that's probably like the most like difficult thing because there's like so much noise. Just because you say AI 40 times in a conference call doesn't mean you're AI. So like,
Uh-huh.
and that's you're right. Like it's a challenge because there's so many companies like I'll meet with and manage teams like we are reconverting into AI, and like I'll sit down with them, and after an hour, I'm like, "You speak in Mandarin? Like I don't
Yeah.
understand." Like, I don't understand what you're doing. Like, no, but the AI is doing, and I'm like, oh, it's really your core technology that you basically have reconverted with some change in code to AI, but AI is really 5% of the code. 95% of it's a legacy. It's not an AI play. So I'm just trying to explain, like, that's why we've spent so much of our time trying to identify the next steps.
Back to these areas. So, America versus China, you think America has the lead. Of course, we haven't quite seen robotics and maybe what China will do there. That could be another area. But like when it comes to, I guess, Chinese AI exposure, is it even possible to get the sort of exposure that you'd ideally want in U.S. capital markets, or is that just like not available to U.S. investors?
No, you can't because, like, look, it's like Huawei has like a massive, scale product offering. I mean, you're gonna be able to like put. See, I almost view it as like not like necessarily decoupled, but I actually do think it's important to play China
Mm.
because I don't view it as like it's us or that. Like it's my view. Like you also have to play that because that's exposing not just China, but like you're exposing to the rest of Asia and a lot of the other areas. So. But it's an arms race, and the good thing in an arms race, a lot of money spent, a lot of winners. Now to your point, like, okay, are we gonna go through a point where there's a Capex digestion? We could go through points into the next year that you have Capex digestion. But it goes back to I don't view that as like a multi-quarter digest. It's like you're just gonna go through some of these pockets where investors will be hypersensitive. Are they lowering growth? Is it over? But it's my view, like, we're just these companies have to continue to put pedal to the metal. You go back, like, and, like, going in, the question is like, "Oh my god, is Nadella gonna recommit to 80 billion that they said that they're gonna do?" And everyone's like and then Nadella's like, "I'm good for my 80 billion."
Hmm.
Okay, it's 7 months later, they're doing 120 billion run rate. So just go back. I mean, because they understand you take foot off pedal, like, look at Intel. That didn't exact work out great.
Another way to that I'm trying to understand this market is like where the primary value accrues. Is it all going to be weighted towards the large cap side of things, or is there some room for small cap plays? Because what I've been astounded in this most recent kind of like run, the AI stock market run, is how lopsided it's been in favor of like large tech
Mhm.
company incumbents. I mean, the returns on the S&P, the Nasdaq for that matter, are heavily weighted towards like I don't know the top 5 companies,
Sure.
and that's like that feels different from a market structure perspective than other things I've seen in the past. But do you think there's a small cap play? Maybe they make a comeback, or does
100%.
yeah? So
Because big tech, they're first ones to benefit. Then the ripple effect is gonna be small mid cap. Like, there's so many names that we've identified. Like, I mean, there's so many small cap names like SoundHound, like stocks like $2. Like, now it's 15. Like, that's the example of like a small cap name on like the AI speech side it's benefited. But just got a small benefit, like names like Pegasus. I'm just giving an example, names like Innodata. Like, there's a lot of small cap plays. There's a lot of small cap plays that are gonna be mid caps. A lot of mid caps are gonna be large caps.
So if you're talking to someone like me, let's say, and I'm just kind of like, I started the question of like, hey, is it still possible to get rich on AI, right?
Hmm?
So what are the plays now that you think are undervalued, right? Because it does give me some pause to sort of, if I have 100% of an allocation, I don't necessarily want to pour it all into that NVIDIA stock that's already kind of, gone to the moon. I will put a portion there. Okay. I'll put a portion there because that's the, not the, yeah, that's more than the foundation of the house. That's kind of like everything. That's the
Sure.
basement. That's like the core piece. So I get that, but I'm also looking for the undervalued play. Do you think I should look more at sort of mid cap, small cap type equities for that? And like, is there an easy button there, or do I just have to do the analyst research?
I mean, look, that's why we created the AI Ives AI 30. Like, if those are the names I'd all, but now, like, there could be names like right now it's rotating, like where I think software and cybersecurity and the autonomous piece are the ones where maybe there's more pedal to the metal relative to, valuation, where upside. But it's what, see, I view it less about small cap, mid cap, and more about sectional software, cybersecurity, consumer, the buckets, the way that we break it out.
Tell me more about the Ives AI 30 then. So, because I was looking at the stocks in there, there's many I recognized, some I didn't. But how do you guys kind of like adjust what's in that basket?
Yeah, and every quarter we adjust. We just launched it a few months ago in terms of based on the Ives AI 30 research. And it's really, look, it's giving investors the ability, okay, how do I play AI? How do I play AI? It's not just these names, like, okay, you got to focus on second, third, fourth derivative. It's us putting it into the buckets the way that we view it, whether it's enterprise software, cybersecurity, consumer, autonomous, semis. And that is something where every quarter, if we feel like there's names that are going to be more relevant based on our research and others that are less,
Mm.
then on a quarterly basis, like some come in, some come out. And that's the way the ETF is based off of our research.
So that's a way to easy button play it, I suppose, for a retail investor. Can I also just buy the S&P? Can I just buy Nasdaq as an indice as
Of
well?
course,
Is
you
that a
can
way to
always
play it?
buy it's my own view. The whole reason I created Ives AI 30 is that this is giving true AI exposure. The problem is like in so many of these others, it's like they're not, there's pieces of it, but this is more concentrated to what I view as the AI theme, true AI, A to Z. And look, and I think it's the biggest tech theme we've seen in the last 40, 50 years. It's fourth industrial revolution, but it's not 1 or 2 year theme.
Is there a point, like at what point would you look at kind of the market and say, okay, at this point, I think AI is overvalued for the point in time. Like, of course, long term, it could be the fourth industrial revolution, but are there some metrics or numbers in the back of your mind where you're like, hey, if this happens, maybe things are getting a little frothy at this point in time? Is
Look, a
that like,
lot of it's based on like when we do, like if I see like deal activity is just continuing to massively increase,
mhm,
conversion, ROI, use cases went from 10 to 80 to what could be one exponential, then to me, we'll continue to look out next 2, 3, 4 years. And if we could justify the valuation, and I believe the street is always underestimating. Like that's always been my view as tech analyst for decades. Like street maybe in the near term it's fine, but it underestimates transformational growth themes
I agree.
because it gets caught up in geopolitical, Fed, this valuation, like different typical themes. And I think that has created the opportunities, right?
The other monkey wrench, it seems, could be like the use cases. For whatever reason, kind of the chatbot intelligence, LLMs, that doesn't matriculate, that doesn't kind of get into the app layer and create economic value. I think I just saw, OpenAI hit what, 10 billion in annualized revenue, which is like a pretty good sign. I mean, that basically means they've got 10 billion people paying them $10 billion just for access to their model. That's a good sign. But there could come a point where we just can't bake the intelligence in our systems and automate, reduce costs, like generate new revenue sources. I mean, is a fundamental driver here like how smart these models actually are and how
Yeah.
far they distribute in our economy? And how are you watching for that?
Yeah, and the enterprise piece, that box, I think, has essentially been checked, right? Like you're seeing that with hyperscalers, the Oracle, I mean, the enterprise is booming. And that's, remember, the AI revolution is really enterprise that's driving it. The consumer piece hasn't started. So when we go to the consumer piece, 26, 27, 28, that's going to be the key in terms of on the consumer side. But that's why use cases are key. It's key to understand where this is all heading. And, it goes back to like when we talk about in 2022, like we viewed it as like, this is a theme we're going to see till 2030 and beyond. But we're only early on because it's just the enterprise.
So I've went through the allocation of these 30, and I kind of looked at a lot of the stocks that you had, and some of them were really exciting. I want to talk about the software because you mentioned a bit earlier a lot of the value accrues to that software layer, particularly around Palantir, who I guess would be the poster child of this. I was looking at the
Messy of
chart.
AI.
It's unbelievable. It's up 500%, over 500% just in the last year. The last earnings report was incredible. I'd say half of the people invested in it probably still don't even know what it does. But Wedbush has said, I mean, Palantir is going to hit a $1 trillion market cap.
Wait,
How
what
is
is
that
it? What is
possible?
it now, Josh?
I'm not, Dan, do you know? Do you
It's
happen
like
to know?
350.
350.
It's a
Okay.
long way to go.
4.
Basically, for it to hit $1 trillion, it needs to continue this type of growth.
Look, it's
What
my
are you looking
view.
for?
First of all, like, I'm the hugest believer and fan of CARP. Like, I believe
Mhm.
CARP, I put him up there with Musk, Jensen, Nadella, just, Cook to some, in terms of like seeing the vision. Well, Palantir has a mousetrap that no one else has. I mean, remember, it started off as government. Basically, they really foundationally are essentially the big data platform for most Western governments, military, a lot of three-letter agencies, and it was taking that technology from a data perspective on the enterprise, creating and basically like doing what they did in government to the enterprise. But CARP from the beginning and Palantirians and Palantir, they understood AI wasn't going to be about the LLMs. It's going to be about data. See, they made very strategic decisions early on. So they were so ahead of the trend that when companies basically started to buy NVIDIA chips and wanted to build out AI strategies, like there was essentially like one company to call. It's Palantir. And
Mhm.
now I get the whole like so expensive, but again, it goes back to like I could have said the same thing when Facebook bought Instagram, and everyone's like, "How is you? That acquisition makes no sense. That's been a 100-bagger." It's my view. You have to be able to look out the next 5, 10 years where these companies are going.
I'm looking at the numbers here. So the market cap, 400, just over 400 billion, trading at 600 times price to earnings ratio, which is
But
outrageous. So
again, see, that's my view. It's like so many times, like I've had companies are like, "Well, it's true." Then all of a sudden, like it's a year later, and you're like, "Huh."
Mhm.
Free cash flow is 2 billion. It's now 8 billion. What's free cash flow going to be next year? 12 billion. Then all of a sudden, the company's not trying to rev, trying to free cash flow. Like that switch flips.
So what milestones are you looking for along the way that signal we're on our way? So we're at about 400 billion. We're going to a trillion. Is there anything in particular you're looking for along the way to kind of check marks?
The biggest thing that I look for, Palantir, it's customers we talk to. What do deployments look like? What are the use cases? What as deal sizes continue to increase? What the commercial US business could ultimately look like over the coming years. The government, I mean, like the US government, like when they go toward AI, the red phone is essentially Palantir, NVIDIA, Microsoft, Oracle.
Okay, there's another company on this list here that feels a little out of place, although it shouldn't. It's Apple. Apple is, I mean, very
Mhm.
clearly missing on the AI front. I saw it recently. They've spent about $1 trillion in buying back shares, and it doesn't seem like they're putting nearly enough money in R&D and AI development, and yet it's still on your list. So I see you shaking your head. Why
Because
is Apple there?
they're on the list because in my view, the consumer AI revolution with 1.5 billion iPhones, 2.4 billion iOS devices comes
Mhm.
through Cupertino. They're a toll collector on the highway. But probably the most disappointed I've been at any point in covering Apple over the 15, 20 years, probably now, because they're missing the AI revolution.
Mhm.
Innovation's not going to happen internally. You have wartime CEOs across tech, Zuckerberg, Musk, Nadella, Jensen with the black leather jacket. It's an F1 race in Monza and Cook's watching it on the park bench, drinking a cappuccino. So it's my view, whether it's Perplexity, whether it's doubling down the Google Gemini partnership, bringing new leadership in, I mean, that's what they need to do. But I think they're going to do something significant.
One other area to kind of look at is private markets. I think there have been a lot of people, retail investors, myself included, who have been worried that some of the biggest gains that we've seen, at least from tech, maybe since Sarbanes-Oxley, I don't know, people blame various things, have been on the
Sarbanes-Oxley,
have been
that's a
on the
blast from the past.
it's the private side though, right? The returns going
Yeah,
to the private side, and then companies waiting to go IPO and
of
go public
course.
later and later. That's a big worry I have with respect to AI. It's just like, well, I mean, if the value doesn't accrue to these public companies, it has so far. But what if it goes into private? And most retail investors don't have access to that. Is that something you're monitoring? Is that something you?
Yeah,
Ha-
it's been an issue, right?
yeah,
Backlog, of IPOs. A lot of the most successful companies, OpenAI, Anthropic, Perplexity, like they're private. Companies don't need to tap public market. But look, ultimately, with Circle and you've seen other, I mean, public is the path. Like, I think you're gonna see more companies forced into the public market just because I think brand, currency, valuation. And then there's a lot of companies where like they had down rounds after down rounds after down rounds. Like, okay, rip the bandit off, get a public valuation. Here is the private value, here is the public. Do it, prove it, and then you'll get. So I think there's some of that definitely needs to go on.
Dan, I want to give you kind of a crossover section. So the Limitless podcast, where we do a lot of our frontier tech and AI investing, and we've got another podcast called Bankless, where we cover crypto all the time. We recently had Tom Lee on the podcast, so
Good friend, yeah.
you probably know he's he's hugely bullish in many of the same things you're bullish on. He's also started this Ethereum treasury company called BMNR. Basically, part of his thesis there is that stablecoins are going to be a very big deal. We have a new money system. It's smart contract driven. It's programmable money. All of these things, and you dot into the future a little bit, and you have a world where you have LLMs and AI agents. The question is, what money system are they going to use? You think an LLM and AI agent can walk into a bank and get an account? No, they're going to use crypto systems. I guess my question is, do you see some signs of convergence there? I noticed there's no crypto stocks in your
No,
portfolio, but
no,
there
yeah.
could be. And what do you think about that?
Look, first of all, like Sailor, Tom, Scaramucci, I mean, some of the people I've known for, basically my whole career, like, I agree 100% with their views, right? In other words, like, crypto and disruptive tech and where everything's heading, it actually aligns with the broader thesis in terms of AI revolution and the AI revolution, when you think about where it's going to go, it's not getting there without crypto, because ultimately, like, there's a convergence that's going to happen here. So I'm very in line with that view. And I think more investors are starting to piece it all together, in terms of crypto, there's Bitcoin, Ethereum, and some others with what's happening in AI.
Very cool. Well, we're definitely very excited about that convergence. Dan, as we end, are you ready for a quick lightning round?
Yeah, let's do it.
All right. You can only hold one AI stock. Which is it and why?
NVIDIA, godfather of AI.
Mm.
Only one chip in the world fueling AI.
What's the best AI model right now?
Oh, I believe Perplexity.
Perplexity. Interesting. Okay.
Perplexity is probably the one that's probably the, like, I think like the underdog. ChatGPT clearly being the leader, but I want to put Perplexity in there because ChatGPT is the leader, but Perplex, I think, is the one under the radar.
Best AI leader CEO specifically for war mode.
Palantir.
Carp. Okay. Over Elon Musk?
Look, Musk clearly, obviously, is a wartime CEO, but I'm just saying, if you look at what Carp's done with AI, with Palantir, you got to give him a little nod over Musk for now.
Most undervalued, underrated AI asset.
I believe it's hyperscalers. I think that's the one, from Microsoft to Google to Amazon. I think those are the ones that it's very undervalued in terms of everything they're doing. I could have said Oracle, put them in the same category.
Okay, so maybe I want to end this episode with where we started, which I asked you the question, is it still possible to get rich on AI? You said yes. Now my question, I guess, is so how rich are we talking? All right. Like how much do you think this will continue to run? I don't know what the size is now for all of AI and the kind of the stocks that you put in that category, but tell me about the size now and where you think this could get in the next 3 to 5 years.
Look, it's the biggest tech trend in the last 40, 50 years. And it's our view in this AI party, it was 9 p.m., it's now 10 p.m. That party goes to 4 a.m. Everyone's waiting behind the velvet ropes. Who's getting onto the dance floor? Jensen, Carp, that, obviously, others are waiting. I would much rather be a bull in that party than a bear outside the party looking through the windows. When you meet up at 6 a.m. at the diner, bulls had a lot better night than the bears.
It's no fun being a bear. Dan Ives, thank you so much for joining us today. It's been a pleasure.
Thanks for joining.